problem, problem 15, computation of income from other sources of daughter Gokak, who held the following investment in previous year 18-19. So first one, rupees 1,10,000, 10% central government securities. So it's less tax-free securities and issued by the central government or government. So no need of grossing up or no need of TDS. So directly we need to calculate the interest amount by using the investment into rate of interest. Second, rupees 4 lakh 10% commercial securities, and this securities has been called as, or it will be treated as less tax securities because they have not given the word called as tax free, and it has been issued by the commercial securities, that is nothing but commercial companies or private companies. So there are two conditions. If in the problem they have given the interest amount directly, then it is a net amount and we need to do the gross up if it is issued by the private companies or commercial companies. But in case if it is issued by the commercial company or private company, then if the interest rate and the investment amount has been given, no need of gross up, we need to calculate the interest, and that interest amount will be taxable under the head called as income from other sources. Next, third one, 8,000, they have clearly given the word called as gross. So no need of any securities. If they given the word called as gross, no need of net, no need of doing the gross up again. So just take the direct amount to the income from other sources. Next, fourth one, rupees 7,200 received as interest on Karnataka government securities. So no word called as tax free. So it will be treated as less tax securities and issued by the Karnataka state government. So it's a government security and interest amount. No tax will be deducted from these sources. So directly it will be taken as income from other sources. Next, rupees 3,600 received as interest on debentures XYZ Company Limited. So it's a private company or commercial company. So they are not given the word called as tax free. So it is an less tax securities and it is issued by the commercial company. And here they have given the interest amount or the investment and rate of percentage. So if they given the interest amount of the commercial company or commercial securities, then we need to do the gross up, whether it's listed or unlisted. So we need to do the gross up. So gross up will be done by using the formula called as amount net amount into 100 divided by 100 minus tax rate. So tax rate for the interest on securities will be 10%. So 3,600 into 100 divided by 90. Next, rupees 3 lakh 13.5% securities of X company limited unlisted. So here they are not used the word, again tax fee not been used. So it's a less tax securities, and X company limited is nothing but it's a commercial or private company. So they have given the interest rate and investment amount. So directly we need to calculate the interest and it will be chargeable under the head called as interest or income from other sources. So no TDS will be deducted. So directly we need to calculate the interest on income from or interest on securities, and it will be taxable under the head called as income from securities. Next, rupees 3,50,000, 11% securities of paper mill company listed. Again, they have given the paper mill company, it's a private company or commercial company, and it's unlisted, means which has been listed in a recognized stock exchange, and they are not used a word called as tax free. So it's a less tax securities, and they have given the interest rate and the investment amount. So no need of TDS to be done. Directly the interest amount should be calculated, and the interest amount will be chargeable or taxable under the head called as income from other sources. Next, interest on post office saving bank account rupees 6,500. So already we know that any interest on post office saving bank account, if it's an individual account, up to 3,500 is exempted from the taxes, and if it's a joint account, up to 7,000 is exempted from the taxes. So since it is an individual account, 3,500 will be exempted, and the balance amount 3,000 will be taxable under the head called as income from other sources. Next, dividend received from Corona Limited gross rupees 32,000. So Corona Limited will be treated as an Indian company because they not mentioned any foreign company or any other cooperative society. So it is assumed that it's an Indian company, and they have used the word So whether the dividend from Indian company, whether they have given the gross or whether they have given the net, the amount is exempted up to rupees 10 lakh, and above 10 lakhs, the difference amount will be taxable. So the amount dividend is less than 10 lakh rupees, so it is fully exempted from the taxes. Next, they have given the information that for purchasing securities of X company limited, that is this one, he took a loan of 2,50,000 at 12% per annum. But this loan was taken from his friend in UK, but no TDS is made. So if you observe, he has taken the loan amount for purchasing the X company limited shares. So normally that interest on loan will be taken as exemption under section 57. But here he has taken the loan from his friend who is located in or who is situated in UK, and he has not made any TDS, means tax has not been deducted from that. So any interest on loan amount, if any loan amount which has been taken by the assessee, any friend, and if he is not paying any TDS, because you need to take the amount from the other sources, and if the TDS has not been deducted, and such expenditure cannot be claimed as expenses under the head called as income from other sources. So the interest on loan will be ignored because of no TDS has been made. Second, bank charges rupees 2,000 as collection charges. So it can be claimed as exemption under section 57. Next, during the year, he also got a prize in Karnataka State Lottery. The net amount received by him was rupees 2,80,000. So they have given the word called as net. So we need to do the gross up. So the gross up will be done by using the formula net amount into 100 divided by 70. So we'll get the gross up amount. Next, interest on all securities is payment on 1st July and 1st January every year. So within the previous year only, if they are received the interest amount, so it is applicable or it will be calculated. So let's see the solution part. Assessee Dr. Gokak, calculation of taxable income from other sources. So central government securities, it's a less tax securities, and we need to directly calculate the interest amount. So 1,10,000 into 10%, interest amount is 11,000. No TDS will be done. Next, commercial securities, they have given the interest rate and investment amount. So no TDS will be done. So directly we need to calculate the interest. So 4 lakh into 10% will get 40,000. Next, interest on public limited securities listed. So it's an government securities, and they have not used the word called as tax free. It's an less tax securities. So they can no TDS will be done. So directly the amount will be chargeable or taxable under the head called as income from other sources. Next, interest on Karnataka government securities. Again, it's a less tax security and issued by the government. So no TDS will be done. So directly amount will be taxable. Next, interest on debentures XYZ Company Limited listed. So they have given the interest amount directly. So we need to do the gross up, because if they given interest amount of the private companies, so the tax will be deducted from the sources. It is assumed that it's a net amount. So the net amount has to be converted to the gross up by using the formula net amount into 100 divided by 100 minus tax rate. So the tax rate for interest on security is 10%. So 100 minus 10, 90. You get 4,000 as a gross up amount and taxable under the head called as income from other sources. Next, interest on securities of X company limited unlisted, and they have given the investment amount and rate of interest. So directly we need to calculate the interest and no TDS will be done. So 3 lakh into 13.5%, 40,500. Next, interest on securities of a paper mill company. It's a private and listed in the stock exchange. So they have given the interest amount and the rate of interest. So directly calculate the interest. So 3,50,000 into 11%, 38,500 will be the interest on securities and taxable under the head income from other sources. Next, interest on post office savings bank account, rupees 6,500 minus 3,500, because it's an individual account. Up to 3,500 the exemptions can be claimed. So balance amount 3,000 will be taxable. Next, dividend from or dividend received from a Corona Limited, they have given the gross But any dividend from the Indian company, if it is less than 10 lakhs, it is fully exempted from the taxes. If it is more than 10 lakhs, the difference amount will be taxable under the head income from other sources. And next, winning from lottery. So they have given the net amount. So we need to do the gross up. So gross up will be done by using the formula net amount into 100 divided by 100 minus tax rate. So net amount 2,80,000 into 100 divided by 100 minus tax rate for casual income is 30%. 100 minus 30 will get 70. So the gross up amount is 4 lakh. So total gross receipts from the interest is 5 lakh 52,200, and from that we can claim the deductions. That is one, bank collection charges rupees 2,000, but they cannot claim the interest on loan which has been taken for the purchase of security because they are not taken they have taken the without TDS or without deducting the TDS. So the amount will be nil. So deductions will be 2,000. So the balance amount is 5 lakh 50,200, which is